This video is for entertainment and educational purposes only. It is not financial advice. Always do your own research or speak with a licensed financial advisor before making investment decisions. Now, with that out of the way, let's talk about something that can truly change your life and your future. If you don't find a way to make money while you sleep, your financial freedom will always be limited, no matter how hard you work during the day. Otherwise, you'll end up working until you die, always chasing the next paycheck, and never truly getting ahead or enjoying the life you've earned. That's one of Warren Buffett's most quoted lines. And it's not just a clever phrase, it's a powerful reminder from one of the world's greatest investors about the importance of building wealth passively. It's the simple truth about why everyone, no matter your age or background, should start investing as soon as possible to secure your future and achieve your dreams. Today, I'll break down exactly why investing matters and share the first steps you should take, even if you're just getting started on your financial journey. You work hard for your money, but is your money working hard for you? Investing is how you make that happen. Money sitting in a savings account today is slowly losing value. Inflation eats away at your purchasing power. What costs €1 today might cost €1.20 or more in a few years. But when you invest, you flip the game. You make money work for you. You build assets that grow in value. You earn passive income. You benefit from compound interest, the most powerful force in finance. Investing turns effort into leverage. It's how you escape the trap of trading time for money. Let me show you something simple. Imagine two people invest the same amount. One starts at 20 years old, the other at 30. The first invests just €100 a month for 10 years, then stops. The second starts at 30 and invests €100 every month until age 65. Guess what? The first person, who invested less money, often ends up with more at retirement. Why? Because they gave their money more time to grow. The earlier you start, the less you need to do later. Time matters more than timing. Here's the truth most people ignore. You don't need to be a genius to be a great investor. You just need the right mindset. Don't chase fads. Don't panic when the market dips. Don't try to outsmart everyone. The stock market is a device for transferring money from the impatient to the patient. Success in investing is, honestly, emotional, not intellectual. If you can stay calm, stick to a plan, and think in decades, not days, you're already ahead of 90% of people. Let's talk about how to actually begin. Step 1. Clean up your financial base. Pay off high-interest debt. Build an emergency fund, about 3 to 6 months of expenses. Know your monthly budget. You can't build wealth on a shaky foundation. Step 2. Learn the basics. Before you invest your money, invest in your mind. Read The Intelligent Investor by Ben Graham. Understand what you're buying and why it earns money. Ask yourself, would I buy the whole business, not just the stock? If you don't understand it, don't invest in it. That's a golden rule for beginners and seasoned investors alike. It's easy to get caught up in hype, but your money deserves careful choices. Step 3. Start with index funds. These are a great entry point for anyone new to investing, or even for those who want a reliable foundation in their portfolio. For most people, the best move is simple. Invest in a low-cost S&P 500 index fund. It's diversified, meaning your risk is spread across many companies, not just one or two. It tracks 500 of the biggest companies in America, giving you exposure to the overall market's growth and stability. It's low maintenance and honestly, it's historically performed well. You don't have to constantly monitor or tweak your investments. You don't need to beat the market to build wealth. Just staying invested can be powerful. Just ride with it consistently over time. Let compounding do the heavy lifting and watch your investments grow year after year. Step 4. Automate it. Make your money work for you by setting up automatic transfers and payments. This way, you don't have to rely on willpower or memory to save and invest each month. Set it, forget it, and watch your wealth grow quietly in the background. Create automatic monthly investments so your future is always being funded, no matter what's happening in your life. Even €50 a month can snowball into something significant over 20 years. Small, consistent steps add up to big results over time. Don't stop, even when markets are down or things feel uncertain. Sticking to your plan is what builds real wealth. Consistency matters more than perfect timing. Step 5. Think long-term. The market will rise and it will fall, but your commitment is what counts most. Over the years, your investments will grow, even if there are bumps along the way. Long-term, the trend is always upward. Investing is not a sprint. It's a marathon that rewards patience, discipline, and perseverance. And yeah, most people quit halfway through. But if you keep going, you'll be amazed at how far you can get. So here's what I want you to remember. Start early. Even small amounts matter. Keep it simple. Index funds, monthly contributions. Be patient. Wealth builds slowly, then suddenly. You don't need a special degree. You don't need luck. You just need to begin. Someone is sitting in the shade today because someone planted a tree a long time ago. Be that someone. This is Climb Mind Business and Investing. I'm not a financial expert. I'm learning this myself and sharing the journey with you. If this helped you take one step closer to financial freedom, subscribe and climb with me. There's more to come. Mindset, money, and momentum.